Hey traders, Jeremy here. This is your weekly market bias update report for Sunday, May 14th. Gonna keep this real down and dirty real quick for you today. Let's start off on FinViz here and look at the 1 week performance right here. So if you're not familiar with finviz.com, they have an awesome map screener here. Go to finviz.com, click on maps, and then down here you can adjust for 1 day, 1 week, whatever. And there are a bunch of things you can do with this map. But what this is basically looking at is showing you the plus or minus percentage for basically the S&P 500 over the past week. So in a really quick glance, you can see that even though the broad market here, the S&P, didn't really move a whole lot, over the last 5 days, it's been volatile, but we didn't really change much from Monday back, at the beginning of the week to Friday. And what you can see here is most areas of the market are some shade of red, which means most of the market actually decreased in price. So you would think that the S&P would have gone down quite a bit, but it is being propped up by very few companies that happen to represent a huge amount of the market. So Google and Amazon are really good examples. Netflix is a really good example. Tesla also had a huge week. So anyways, interesting chart tool here for you to be able to look at and get a little bit more information as to what is going on under the surface of the market. So just kind of wanted to start with that. So going back to the S&P here, let's kick it out to a weekly chart because the daily chart's a mess. Really not a whole hell of a lot has changed. This has been kind of a boring time the last month or so, month and a half really, in the market to do analysis because we are just consolidating neutral, basically continuing to build below the 4,200 level and really down between that and like 4,065, the lower end of these two wicks, and just below the 20 SMA on the weekly chart is kind of the lower end of the range. If that gives out, more selling will probably ensue. And in that case, my base case would just be looking at diagonal support, which also corresponds to the 50 period weekly moving average. So if we break there, probably another 80 or so points, 90 points, somewhere in there between the two, potential risk to the downside on the short term. Hasn't done anything wrong on the weekly chart. Again, the daily chart's pretty messy, so it's hard to really trade on the S&P 500 right now. But we're still holding the 9. We had a couple of really big sell-off days over the last month or two, and it brought price down, but the bulls stepped up and bought it right back up, and we have not closed below that all-important 9 EMA. It'll be interesting to see if we can hold that week or hold that support this week, because we've kind of run out of time here. We had a big gap between price movement and the 9 EMA, and so it made sense that we needed to take some time off. But now we are hugging right up against that level, so we're kind of at the point where the rubber meets the road, so to speak. And I'm not going to be too terribly surprised if we start to see some movement here, some real movement here in the market in the next week or maybe 2 weeks. So anyways, again, S&P, not a whole lot to see here in terms of actual trades. Let's go over to the NASDAQ. The NASDAQ is holding up much better. You can see a tighter range here and actually testing the high end of the range instead, and trying to actually break out 2 weeks ago and maintaining that same level here so far this week, as opposed to the S&P that had kind of the high several weeks ago and has pulled back. And really that strength in technology sector is again due basically to the likes of Google and Amazon, Netflix, that kind of thing. Just the strength is holding this part of the market up. So if you are trading this week, especially short-term trading, the NASDAQ is 100% where you want to live. Honestly, the other three sectors or industries, excuse me, are pretty much not even worth looking at. I will look at them for you just for the sake of it here. Russell 2000 threatening a breakdown, actually. I'm going to call this neutral to bearish. This is a pretty significant support level, so you know, it could very easily hold. But I think this is just continued BS along the regional bank crisis that we have right now. If we get more bad news from the regional bank crisis, this support level around 1730 is probably going to break on that news. And if so, we would probably come back down and be testing the 1650 level again. So Russell 2000, unless you're looking to short something, is probably a clear stay away. Going out to the Dow Jones Industrial Average, really nothing to see here. Continued consolidation in a really wide range. Charts in this area for the most part look nasty. So again, stay away. S&P kind of looks blah, stay away. So NASDAQ is really the place you want to live. Going out to crude light to check that real quick, had a pretty significant sell-off over the last month. Basically since mid-April, we have just had a lot of volatility into the space. It needs to settle down here. It would actually be kind of nice to see a double bottom formation here, and whether or not this pullback continues to give us kind of a real double bottom test where the bodies of the candles are more in that support zone, or if this wick ends up being that double bottom here. You can see the two wick lows are roughly equal. Only time will tell. The actual chart itself looks kind of nasty, and you know, right now we don't want to catch a falling knife. You never want to buy assuming that the price is going to turn around. You want to wait to see it actually turn around. So right now this is just a large bearish retracement, a little bit deeper bearish retracement than a few of these other ones that we had, but it is rolling over and it is still definitely in downtrend on the daily chart. You can see the diagonal resistance there overhead. You can see all of the moving averages above you. So complete stay away for now. We need to see that develop both on the daily and the weekly chart. Going out to Bitcoin, we broke the 9, which is unfortunate, but not the end of the world. You know, Bitcoin is a volatile asset. Everybody that trades it knows that. So as long as we hold the 20 period moving average here around 25,000, I am still saying that this bullish uptrend is still intact on the weekly chart. We do need to hold this 20 SMA around 25,000 for that to remain the case. That is a very, very important support level that goes back all the way back to basically May of last year. So an entire year's worth of price action has tested that 1, 2, 3, and now coming into 4 different times at that exact same level. So that is obviously a very important psychological number in the market for traders. We need to see that hold. On the daily chart, if we drop in, it just looks gross. I mean, honestly, this kind of screams lower prices to me, and that is not much of a drop down to 25,000. So if this level breaks, you can see this is kind of a head and shoulders pattern up here. Here's the left shoulder, here's the head poking above the right shoulder, and then the neckline is what you call the support level that kind of completes that pattern. If this breaks with the momentum that Bitcoin can have, it wouldn't surprise me to see the $25,000 level break with at least a significant sell-off and then probably recovery with a large lower wick would be my guess, if that does break, but it's going to be very important for that 25,000 level to hold. Similar thing on Ethereum. I'm not going to go into it. Very similar pattern, breaking down, moving averages starting to curl over, kind of gross there. Gold, holding right in the middle basically of a large neutral range. The shorter term moving averages have rolled over a little bit. We do still have the support of the 50 period moving average and the lower support end of this consolidation range. It wouldn't take much in terms of shitty economic data or banking crisis issues or things like that to push this right back up to test the upper end of the range and a potential breakout. But right now where it is, there's not really much to see. So kind of waiting to see what happens on gold. Copper got ugly again. Had a chance here with a nice pullback and held support for weeks and weeks and weeks. Just couldn't get the breakout to stick here again. rolled over. Now, basically, we're going to need some time down here around the weekly 200 period moving average, just around $3.60. Hopefully we get some solid consolidation there before a move higher, just like we did here. Really hugged that 200 SMA and then finally gave us confirmation with some follow through. So looking for a similar pattern here. I really want to see a month or so probably of consolidation here, holding and confirming that this 200 period moving average is still indeed going to act as support before looking for a potential trade. But on the short term, nothing to see there. Natural gas is actually starting to get more and more interesting to me. Obviously, it has just been brutalized from $10 all the way down to the current price of $2.26. The thing that I like about it, we do have a massive consolidation range here, basically. Months and months of price data here. We have actually gotten to the point where we are pressing into the 9-weekly EMA, and if we can reclaim that and actually give it a couple more weeks and then reclaim it, that will allow this 20 period SMA to come down and converge into that same price zone and might give us a really nice breakout. So kind of waiting to see on that one. Probably has 2 more weeks of development unless we get some kind of news in this space. Natural gas is an instrument that has a lot of volatility. You can see these massive spikes and run-ups. And for anyone that's not familiar with the leverage on natural gas, it is highly, highly leveraged. So even though this is only $1.06 price move on the natural gas, that would probably be $10,000 or more of a gain on a single futures contract because there is so much leverage on it. So if you are not familiar with futures and don't know how to protect yourself on that, look for stocks like UNG, that's the United States Natural Gas Fund, and potentially look to play the bottoming pattern in that instead when this reclaims its moving averages and breaks out. Going out a couple more here. We got palladium, more volatility, more of the same. Had a nice run, got smacked down by resistance. Now we're just kind of right back in the middle of this huge range bottoming pattern that we've had for quite a while. So nothing really to see there until we see a little bit of consolidation and hopefully a signal candle moving higher again. If we put this out to the weekly chart looks okay. Not super great. We have reclaimed thus far the 9 EMA. So we did open today when the futures opened for this trading week, just slightly above the 9. The pressure from the downward sloping 20 period moving average is still directly overhead. So really before anything might be interesting here, we have to see the reclaim of that decreasing 20 moving average on the weekly, and that correlates to 1532. So looking back at the daily chart, if we get back above 1532, which is this yellow line, that also clears both the 9 and 20 on the daily chart. I might be interested in a trade there, so we'll see how that develops. I like the decreasing volume on these red bars. That tells me there's less participation yesterday than there was the day before on the downside, which is what we like to see. We want to see less and less participation in that sell-off as it goes. If we get another big volume spike here on a big red day tomorrow, then we'd probably be coming down and testing the 1400 level. But until that happens, we have to kind of assume that support here around 1475 is going to hold. So if that does hold and we get a signal candle followed by confirmation breaking above 1532, that would be a potential trigger in. Going to platinum, gross. It's still holding its diagonal support, which is great. But this is just a massive double top, tons of volatility, really hard to get an edge here. Unless you're day trading, so nothing really to see there. And finally, last but not least, going out to silver. Massive volatility on silver, and this is really interesting because silver and gold have been trading in lockstep for quite a while. And I don't know what the news was or if there was anything specific, but for some reason last week, the correlation between gold and silver broke, and silver had a massive sell-off there. Came back down into the 50. Nothing really to see here. We have to wait for support to build and for this to clean itself up. So anyways, last but not least, let's go out and just look at our market internals, and then I'll let you guys go. We are below the -50 line. Even though last Friday didn't technically close below the 50, we were neutral. Today so far would be the first day that actually signaled bearish. So usually we want 2 bearish signals below -50 to signal the market's rolling over. I don't know that that confirmation is really necessary right now. If anything, we're going to be playing off of the actual S&P. And if the S&P does break the lower support here of 40.65, you have to bet that we're going to see that secondary bearish candle here. So I'm looking at the S&P right now over the AR high low, even though AR high low often leads as an indicator. Right now, I'm looking mostly at the S&P to determine that. Finally, last but not least, on the New York Stock Exchange advancing declining line. Yellow line here is marking 0. Basically, this shows that on Friday, the 12th, more stocks were declining in value than were moving higher in value. And again, you can see that pretty easily from this chart. Let me put that on a daily. You can just see that at a glance. There's some green, but there's a lot more red still on that chart. And especially on the weekly chart, it makes it very, very obvious. So anyways, long story short, bears are favoring on our market internals. We're waiting to see the break on the S&P. It's going to be a hard trading week, I think, to find good setups because there is just so much blech in the market right now. Nobody wants to be the first to buy to try to push the S&P up and over the 4,200 breakout. There's still a lot of fear and a lot of hesitation, so we need to let that work itself out. I'm planning on being in front of the market this week a little bit, but I'm also actually moving this week. I'm in my new digs right now. Just moved to Portland, Oregon. So anyways, I'm going to be focusing on that because I'm not seeing a whole lot that is grabbing my attention in the charts. As always, guys, let me know if you have any questions. Let me know if I can be of help to you in any way, and I will catch you next week.